Welcome back to the channel, everyone. Today I want to talk about AMC nearing its endgame with the cohodes NFT. I also want to talk about Citadel hiding their put options and their short positions. So stay tuned and let's make some money. And now I want to dive straight in with the key information. So, as Nathan G tweeted, as of today, Citadel supposedly covered 3.3 million shares or 3.3 million put options. Yesterday, some unknown company, Altai, which is the company that I covered in yesterday's video, very similar to Iceberg, look at the photos shown, shorted AMC more than their entire company is worth. So he googled a few things and check out what he found. So Citadel supposedly covered 3.3 million shorts or 3.3 million put positions as of today, the 16th of November 2021. That's what I showed in yesterday's video from the 13F filings. And yesterday, an unheard of hedge fund, Altai Capital, shorted 4.2 million shares or 4.2 million put options from their latest 13F, which I also covered yesterday. I also touched on the fact that was a massive portion of their holdings. So from Altai's latest 13F, they've got $136 million in assets. But yet they just placed a short bet against AMC worth $161 million. Altai also only has 4 employees and there's only 1 employee named on the website. GoDaddy was the website builder used to build the website, which isn't very secure or very professional. The contact number is a cell phone that takes you straight to voicemail. No voicemail either, just your standard, your call has been forwarded. And supposedly the president of Altai went to school at University of Chicago and studied business at the Kenneth C. Griffin Department of Economics. Supposedly he also works at Westloop Capital and also works at Goldman Sachs all at the same time. Basically it all just seems very, very unusual how Citadel somehow covered all of their puts or a large portion of their puts, and Altai seemed to pop up with the pretty much exact same number of puts. Therefore, it seems like Citadel just actually shifted all of their put options and potentially a lot of their short shares, or synthetic shorted shares as well, straight over to Altai. So if you didn't already know, I personally use BlockFi to invest in cryptocurrency. Not only can you just buy some Bitcoin, but you can also earn interest on your deposits, also paid in cryptocurrency, up to 9.5% per year. So you can just continue accumulating more and more and more Bitcoin. And if you sign up to BlockFi using my link in the description down below, you can get up to $250 in free Bitcoin just for signing up and making your first deposit. And BlockFi also offer a rewards credit card with an introductory rate of 3.5% cashback on your purchases, also paid in cryptocurrency. So again, you can just continue accumulating more Bitcoin. There's also no annual fee, but unfortunately the credit card's only available in the US at the moment and not in the UK. And when you've generated a massive profit on your investment, instead of having to sell off your Bitcoin or your Ethereum or your Shiba Inu or your Loop Ring and potentially missing out on the next run up, you could just take out a crypto-backed loan. Therefore, you can get cash and keep your cryptocurrency. And now I also want to talk about the endgame for AMC. As you can see here, this is actually on Fox News. It says sources. Marc offering a plan to force shorts out of stock with AMC issuing a security token as a dividend. Now I do want to be clear, this isn't really an NFT dividend because obviously AMC can't yet give out a dividend. It's an AMC STO, which is a security token offering. So this security token offering would not be considered a dividend because it will have no cash value at the time of minting. It will trade on T0, it's perfectly legal, and it can easily be implemented. Obviously, some companies that have historic losses and are still generating losses can't issue dividends. Therefore, AMC, yes, is historically loss-making and is currently generating losses, therefore can't issue a dividend, but it can issue a security token offering. As John said on Twitter, an update for anyone interested. Marc just gave a nice update on his involvement with helping the AMC community. He's exchanged emails with Adam Aaron and has a website that outlines his plan. In summary, his entire strategy hinges on AMC's willingness to issue a security token offering, which is a form of NFT. Now obviously that NFT will be issued to all 518 million shares in the float, 1 NFT for every 1 share owned. The method of distribution and exchange of these STOs is on a real-time exchange or T-0, not a T+2 or a T+6 or a T+4 or any of that nonsense, just T-0. And therefore you can't short and not locate an STO, and therefore anyone holding short AMC shares that are unable to be located or have sold synthetic shares will be in immediate trouble as a result of the STO. Marc states that this entire process is legal, available and effective. However, the decision does lie with AMC and Adam Aaron. I think this is absolutely brilliant and could be the catalyst that we need to send AMC to new highs. And now I also want to talk about the trading of options on AMC and GameStop. Some people say it's really bad and that you shouldn't do it because it gives free liquidity to those hedgies, and some people swear by it. So what's the right answer? And I think Domo Capital Management hit the nail on the head. People tend to have a selective memory about Roaring Kitty or DFV. Remember, he didn't buy weeklies on GameStop or AMC 50% or higher than the current quote, nor would he have ever recommended such a thing. For example, back in December 2020, Roaring Kitty wasn't buying the 7th of December $100 GameStop calls. He was buying the January 2022 $7.50 calls and the $10 calls. Roaring Kitty was buying the yearly options, not the weekly options, and therefore wasn't gambling money on the squeeze happening next week or tomorrow or in 2 days' time, but instead in a year's time or in 2 years' time. His options play was over a year out. Gambling has a high risk for loss, investing does not. So therefore, if you're playing options with a much longer expiry, then it's not really a waste of free cash to the hedgies. But if you're expecting the squeeze to happen tomorrow and you're going to bet pretty much your entire savings on it, then I do think it's a bit of a waste. Now I also wanted to recap and touch on Loopring as well. The Loopring price is still doing very well, and Loopring just tweeted saying the world is finally starting to see zero knowledge tech is the path to a more fair and more inclusive financial system for all. This is the way. This is obviously from Star Wars or The Mandalorian, but is also very commonly said on Wall Street Bets and Superstonk, and therefore many people are relating this tweet to GameStop. I personally think it's only a matter of time due to all the leaks of information that Loopring and GameStop do announce their NFT platform soon. Now you may also remember this screenshot from LinkedIn. Vinay Patel used to work for Amazon and recently announced a new job update. Somebody commented, the finance director at Amazon commented saying, "What? Vinay?" And he said, "Lol, I had an opportunity that was very hard to walk away from. Hope you're doing well." And the finance director said, "Please don't tell me we lost another teammate to GameStop. That's great." And now Vinay has actually updated his job title and he's now the director of finance at, you guessed it, GameStop. Therefore, it seems like GameStop is very easily poaching many members from Amazon. Clearly, they're offering something big and something very attractive. Now, I also wanted to touch on Evergrande and just how desperate they're getting. The chairman of Evergrande has pledged his luxury properties in Hong Kong and is selling art and calligraphy and even his own cars to pay the company debts. The Evergrande founder has pledged 2 luxury properties in Hong Kong worth around $38 million. Evergrande has been selling some art and calligraphy to raise fresh capital. They've also recently sold 2 Gulfstream jets, and he even had to sell his Porsche Cayenne and an apartment to raise cash and pay those debts. Clearly Evergrande are very desperate if the owner is selling a Porsche Cayenne worth say $50,000 or $60,000 used to pay down a $300 billion debt. And incredibly, it looks like Evergrande is still using debt to repay debt. Around 300 million Hong Kong dollars was raised to repay an overdue Evergrande bond. And therefore, it seems like Evergrande, or the owner at least, is still raising debt to pay down those interest payments. I think this goes to show just how screwed Evergrande is and how much of an impact it's really going to have if the owner is having to sell off cars and properties just to make any repayments that he can. And I also want to talk about something I speculated on a little while ago, which is the credit default swaps on Evergrande debt. So the losses from credit default swaps come to light. There is really not a single day where more scandals around the Chinese real estate crisis are not revealed. Evergrande's default and the real estate crisis in China are causing losses of around $10 billion for the 10 largest pension and investment funds specialising in Asia. One aspect that has often been omitted from reporting around Evergrande is credit default swaps. Our recent DMSA study covers these and shows that the funds with the largest exposure to Evergrande bonds have led losses of up to 21% this year. According to Goldman Sachs, so obviously this data is going to be 100% accurate and they're not going to make the data out to be smaller than it really is, like they did in 2008. Bear that in mind for the moment. According to Goldman Sachs, the market's credit default swap exposure to Evergrande is about $158 billion. And therefore this shows the extent of the spillover effect from the Evergrande bankruptcy. In addition to the $23.7 billion of bonds that have defaulted, another $158 billion would then be lost. So therefore those $23.7 billion in bonds that have defaulted hold around $158 billion in credit default swap insurance, so around 5 times the size of the actual debt. So obviously let's scale that up. $300 billion in Evergrande debt amounts to around $1.5 trillion in credit default swaps. And therefore that's effectively 1.5 plus the extra 0.3, so $1.8 trillion that could be evaporating from the Chinese and American and European markets. And Dr. Marc also says, do people still believe that the financial meltdown is not coming? It's already here. Guys, be sure to let me know down in the comments below what you think about the AMC endgame and also what you think about Citadel hiding their shorts and their put options. And if you haven't already, be sure to sign up to BlockFi using my link in the description below to get up to $250 in free Bitcoin. And as always guys, if you enjoyed this video, be sure to check out some of my others. Alternatively, subscribe to the channel and ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.